Hi everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in financial filings. Today we're diving into Huntington Bancshares Incorporated's latest update, and it looks like they're keeping us on our toes with some interesting dividend news. Let's get straight to it. Huntington Bancshares Incorporated, a pretty big player in the banking world, has just put out some key information. Think of them as a financial supermarket, offering everything from checking accounts to investment services. Now, the really juicy part of this report isn't a massive change in their overall business, but rather a specific announcement about dividends. Dividends are basically when a company shares a slice of its profits with its shareholders, the people who own little pieces of the company. Huntington announced a quarterly cash dividend on their Series I non-cumulative perpetual preferred stock. This might sound complicated, but it's essentially a special type of stock that pays a steady dividend. The amount being paid out is 30.5625 per share, which works out to about 35 cents for every depositary share. This dividend is set to be paid out on December 1st to those shareholders who own the stock on November 15th this year. This particular stock, the Series I preferred stock, is traded on a stock exchange called NASDAQ under the ticker symbol HBAN. So people who invest in this stock will be receiving this payment soon. The fact that they're paying this dividend signals a certain level of confidence from the company in its financial health. They're comfortable enough to distribute some of their earnings. This announcement was made through a press release, which is like an official statement to the public. This specific report is considered an other event, meaning it's significant enough to be reported, but doesn't fit into the more regular financial reporting categories. The filing also includes this press release as an exhibit, which is basically an attachment to the official report. It provides the details of the dividend declaration. Think of it as the official announcement of the dividend. Now, while this report focuses on a specific preferred stock dividend, it's important to remember Huntington also has common stock. That's the more typical stock most people think of, traded under the ticker HBAN. The news about preferred stock dividends doesn't directly change the common stock, but generally a company paying dividends consistently is a good sign for all its shareholders. This filing also has something called an interactive data file. These are computer-readable tags that make it easier for analysts and investors to pull out specific information from the report automatically. It's like giving the data a special code so computers can understand it better. The report is officially signed off by Marcy C. Hingst, who holds the title of General Counsel. This means the company's legal team has reviewed and approved the filing. Now, let's zoom out and think about what this all means for Huntington Bancshares. Declaring a dividend, especially a steady one on preferred stock, typically suggests that the company is generating enough profit to cover its expenses and still has money left over to reward its investors. For investors holding the Series I preferred stock, this is great news, as it provides a predictable stream of income. However, it's also worth noting that this is a filing about a dividend declaration. While positive, it doesn't give us the full picture of the company's overall financial health or its performance in revenue or profit for the quarter. We need to look at their more comprehensive financial statements like a 10Q or 10K to get a deeper understanding of their earnings, assets, and liabilities. Looking at Huntington's market position, they operate in a competitive banking environment. Companies like this are always balancing growth, profitability, and shareholder returns. Decisions about dividends are strategic. They can attract certain types of investors and signal financial stability. For Huntington, paying this preferred dividend means they're meeting their obligations on this specific class of stock. It's a sign of responsible financial management. The specific yield of 5.70% on the Series I preferred stock is also a factor for investors comparing it to other investment opportunities. In terms of risks, the banking sector is always exposed to economic downturns, interest rate changes, and regulatory shifts. While this filing doesn't detail those risks, they are an inherent part of operating a bank. Any instability in the broader economy could impact Huntington's ability to generate profits and pay dividends in the future. To sum it up, Huntington announced a standard dividend payment for a specific type of preferred stock. It's a positive indicator of their operational stability. However, it's just one piece of the puzzle. You'd want to see their full financial reports to get the complete picture of how the company is doing. What's your take on these dividend announcements? Do you think Huntington is making smart moves for its shareholders? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe to Corporate Decoder for more insights into the world of business and finance. Don't forget to join our Discord community linked in the description for even more behind the scenes discussions. Thanks for watching, and I'll see you in the next video.